Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 18th, 2025, and we're diving into the latest earnings report from GMS, a leading North American specialty building products distributor. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss GMS's performance, especially given the challenging market conditions they've been navigating.
Revenue and profitability overview. Let's start with the top line. GMS reported net sales of $1.33 billion for the fourth quarter of fiscal 2025, a 5.6% decrease from the previous year. Despite this, they managed to deliver an adjusted EPS of 1.29 cents, beating the forecast of 1.50 cents. John, what are your thoughts on these figures?
It's quite impressive that GMS exceeded EPS expectations despite a decline in net sales. The decrease in sales was primarily due to softer end market conditions, but the company managed to maintain resilient pricing in key product categories like wallboard and ceilings. Their ability to beat EPS forecasts highlights effective cost management and operational efficiencies.
Indeed, and their net income took a significant hit, dropping 53.7% to $26.1 million. How does this impact their overall financial health?
The drop in net income is concerning, but it's important to note that GMS has been proactive in implementing cost reductions and optimizing their operations. Their adjusted EBITDA, although down from last year, still reflects a solid margin of 8.2%. This indicates that while revenue pressures exist, the company is managing its profitability well.
Operational efficiencies and future outlook. GMS has been focusing on operational efficiencies, realizing an additional $25 million in annualized cost reductions. They also generated a free cash flow of $183.4 million. How do these efforts position them for the future?
These cost reductions are crucial, especially in a challenging market environment. By optimizing their operations and leveraging technology, GMS is not only preserving cash, but also enhancing their ability to invest in strategic initiatives. The free cash flow generation is a testament to their strong cash management practices.
And what about their share repurchase program? They repurchased shares worth $26.4 million. What does this signal to investors?
The share repurchase indicates confidence in their long-term value. It's a way to return capital to shareholders and can be seen as a positive sign of the company's financial health. Additionally, CEO John C. Turner Jr. expressed cautious optimism for fiscal 2026, suggesting that GMS is well-positioned to capitalize on market improvements.
Product performance and market conditions. Let's delve into product performance. Wallboard sales decreased by 10.1%, while ceiling sales increased by 6.4%. How do these figures reflect the current market conditions?
The decline in wallboard sales is indicative of the broader market challenges, particularly in construction. However, the growth in ceiling sales shows resilience in certain segments. Steel framing faced price deflation, which impacted overall sales. The market is grappling with high interest rates and uncertainty, affecting demand across major end markets.
Given these headwinds, how is GMS adapting its strategy?
GMS is focusing on maintaining resilient pricing and expanding its product offerings. They're also investing in strategic acquisitions and greenfield expansions to strengthen their market position. These efforts, combined with cost management, are aimed at navigating the current challenges while positioning for future growth.
Key takeaways. In summary, GMS has demonstrated resilience in a challenging market with a focus on cost reductions and strategic growth initiatives. Their ability to beat EPS expectations despite revenue declines is commendable. John, any final thoughts on GMS's investment prospects?
GMS is navigating a tough environment with strategic foresight. Their operational efficiencies and cash flow management are strong positives. As market conditions improve, they are well-positioned to capture growth opportunities. Investors should keep an eye on their strategic initiatives and market developments.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on GMS's performance in the comments below. Until next time.